On to Ethiopia now. Policymakers over there are aiming at lowering inflation and eliminating distortions in the foreign exchange market. The Horn of Africa nation, whose troops are engaged in a conflict against Tigrayan rebels in the north, raised cash reserve requirements for banks and increased short-term borrowing rates for commercial banks too. Annual inflation stood at 26.4% in July. It's gone up even further to over 30% in the month of August. The rate has been above or close to 20% for most of the year, defying government efforts to curb it. The government is also streamlining the foreign exchange market, where the difference between the official exchange rate and that in the parallel market has widened this year for various reasons, including the war in the north. The local currency, the birr, is now trading at around 60 to the dollar on the parallel market. Compare that to around 45 to the dollar on the official FX market. Let's bring you up to speed with developments on this story. Coletta Anjohi joins us now from the Ethiopian capital tonight with more data on this. So, Coletta, headline inflation has been over 20% for all of 2021. What's driving it to those levels?
Well, the government says that partly to blame is COVID-19, where we saw in the past year the government introducing some stimulus into the economy to encourage production, to encourage people to really have a normal life in terms of getting goods and services. So that was kind of an impact to it. But over the time, we know that from around November last year to now, we've had internal challenges in terms of security, peace and security. And this is really eating up in terms of government direction of resources and all that. We are seeing the government redirecting some resources into offering humanitarian assistance, as well as ensuring that peace and security, especially in areas like the north, is stabilized. So that kind of has an impact in terms of the inflationary issues. And we've seen the government saying that, for example, in just this past month, it spent about $190 million in terms of ensuring that humanitarian effects, as well as other assistance and related issues are concerned, are given to conflict areas like in the north. So all these, especially, and peace and security is being underlined, especially as one of the biggest factors that is kind of making the inflation rates to kind of be wobbly.
So the National Bank of Ethiopia also recently ordered commercial banks to not issue any loans backed by collateral, particularly physical assets like buildings or land. Is that order in place, but also can individuals or companies get unsecured loans, or has that also been frozen?
Yes, the order is still in place, and the government has insisted that people should note that it is a temporary measure, and more of it more aligned to what is happening in terms of peace and security, especially with the northern region. And the government, we've seen it saying that these measures are being carried out in great cooperation with the security agencies. So it is a temporary measure. Of course, it will bite the everyday man, if I would use those words, people who are not targeted by this. It has nothing much to do with the market issue. I mean, these directives. It's more of a peace and security issues and ensuring that what the government has called economic sabotage does not happen by individuals that it is targeting. So yes, the everyday man who would love a loan to probably do a business here and there, who had planned for it, might have to postpone it until the government feels that it is safe to open up to loans and all that. But we've also seen the National Bank introducing new measures. I mean, from 1st of September, commercial banks will be expected to increase their reserve requirement from 5% to 10%, and also the commercial banks will also be expected to transfer at least 50% of forex exchange holdings, and all these expected to gear towards what the government is saying is a targeted approach to ensure that economic sabotage does not happen.
And trying to very aggressively reduce the amount of money in circulation. One last question for you. So the birr has lost around 20% of its value against American dollar just this year alone, and it's trading at a premium on the parallel market. But beyond what we've discussed, are there other measures being considered to try and close that gap between the parallel and the official market rates for the birr against the dollar?
Well, according to the Minister of Finance, they say that we've seen it employing what it calls shock absorbers or shock measures to ensure that there's that short-term stabilization of the forex issue. But it says now what it is embarking on is a long-term permanent solution to this challenge, and it says this will ensure that it kind of nibs the problem from the root causes, and it's going for the long term. It says it will cost the economy a bit, but it's willing to go that way way in a bit to really ensure that the currency becomes a bit stable. And it says one of the issues it will do is ensure that there will be a smooth transition to ease the forex supply and also create a buffer in terms of forex buffers, and this may be through export receipts and all that. Then in the long run, it wants to encourage more exports, because so far exports have been growing according to the government. So it wants to encourage industries to ensure that those that are export oriented really do well, and so the country can be able to earn more in the long term. And also what we are having now, we've seen the government launching a campaign that it calls against illicit financial transfer, and it is encouraging citizens to ensure that for those who have relatives in the diaspora or want to get any money from abroad, then they should do that through the legal means, which would be the different companies that have been identified internationally for forex or foreign exchange or foreign transfer.